Welcome back. Looking good for the markets. Let's get chatting about individual results. Then Kirloskar Ferrous Industries posted a decent set of numbers in the fourth quarter. The revenue gained by about 51% on a year-on-year basis, but the company witnessed some sort of compression in the margins on a quarter-on-quarter level. To discuss this and more, we are joined by Gumaste, who's the managing director of the company. Thanks a lot, Mr. Gumaste. Pleasure always speaking to you. Just wanted to understand a couple of things. You know, while iron ore and coke prices have corrected, and that's good for you, there are cost-saving measures that you've taken. What would the blended margins be on a consolidated basis going forward? And what are the current prices for both pig iron and casting iron right now?
Yeah, first of all, the commodity prices have corrected a little bit both on iron ore and coal. But generally, we operate with certain level of inventories. It takes time to reflect in the results or in the cost of manufacturing. I would say that the pig iron prices and casting prices have been stable and margins should continue in the similar range bound for the coming quarters.
Could you give us a sense of what the margin should be in? And when you say the prices have come down, can you tell us how much have they come down from fourth quarter levels currently?
Currently, I would say that the prices are similar range as the fourth quarter because there has been no further correction in the prices over the last few months or few weeks. And the casting prices are also stable because the commodity prices over the last quarter have been very stable.
Okay. I wanted to understand, Mr. Gumaste, what the end user demand is looking like for your casting segment. For example, you have tractors, which is at around 40%, and you have exports as well, which is quite strong. So going into FY24, what are the trends that you're seeing in terms of end demand when it comes to casting as compared to FY23?
Demand from the automotive sector as well as the off-highway vehicles or moving equipment has been very strong going last few months, and it continues even for the coming months as well. The tractor went through a cycle of sluggish market condition, but I can see some signs of recovery from the tractor industry as well. Overall, casting demand is strong for KFIL, and I think it will continue over to the next year as well.
Okay. So what did you close FY23 with when it came to volumes, and what are you projecting going into FY24? There was an earlier target of around 15% growth in terms of volumes when it came to castings in FY24. Are you sticking to that?
Yes, I think last year we did well, and we could add on to the casting volumes by almost 15%, and we are looking forward to add further volume even this year because we added a new foundry in Solapur, and we will start the capacity utilization on the Solapur second foundry or our fourth foundry in the KFIL portfolio. So we will continue to have 15% growth in the casting field.
And pig iron would be 6 lakh tons?
Very close to 6 lakh tons. I think you are quite updated. And this year also one of the blast furnace will go for the technology upgrade with the BLT. But in spite of that, we will move forward from 5 lakh ton to very close to 6 lakh ton for the year.
And what's the production rate for ISMT currently for both steel, alloy steel and tubes? I mean, earlier you said that steel is at around 21,000 per month and tubes is around 13,500 per month.
Yeah, you are perfectly right. We are at a run rate of about 2,50,000 for the steel. And we are attempting to go up by about 10% in steel making. I think we should be successful. And tube making also, we have achieved growth in the last year. Overall, we look forward that ISMT between the steel and the tube, we should get a growth of about 10 to 11% for the year.
Okay. Your debt figures, is it around 850 to 900 crores currently?
Yeah, around 800 crores, all the debt, including the working capital. And we continue to be in that range bound, except the swapping of loans. We won't have any big fresh borrowings.
Okay, all right. So no fresh borrowings, but reduction plans, fundraising we can expect in this fiscal?
No, actually, we don't have any reduction plans because we continue to invest. Okay. Investment will continue even in this year for the debottlenecking and also maybe acquisition. Hence, I don't see possibility of a substantial reduction in the loan position in this financial year.
Okay, you were the highest bidder for Oliver Engineering. Can you tell us how much you paid for it upfront? What is the revenue and the Ebitan? Is it in the black?
I couldn't get you. Which is the one you talked about?
Oliver Engineering.
Oh, okay. Yeah, it's still work in progress. It's not at transaction has not happened. It's still work in progress. Support time.
So can you give us a sense of how much did you bid for it, and what is the capex that is required for you to incur once you get the project with you?
It's a foundry, and we expect current capacity is 28,000 metric ton per annum. It's a small asset, and we expect that we will have to invest maybe 20-25 crores to bring it to the good operational level. And the bidding one, I will refrain from revealing the numbers because I don't know. CEC has to take the call, and it has to go to the NCLT, and I will definitely come back to you with all numbers and figures once it is through.
All right. So 20-25 crores is over and above what you've bid for. Yes. You should be getting. Yes. And 1,000 tons should usually yield a revenue and EBITDA of how much?
No, I think I talked about 28,000. You can say 2,000 tons per month. And but we have certain plans. I think we don't operate it the same way as what has been there. We will do it differently. And I'm sure that once we are through with the acquisition, I'll give you what we plan to do and how we want to move ahead with that. But typically, 1,000, our casting realization, we are at about 125 to 130 rupees a kg, 130,000. And you can expect this asset is about 300 crores turnover opportunity, but we'll have to do something to make it more attractive, more relevant for us. So we'll come back once we have the asset with us, what we want to do for that asset.
Okay, we'll definitely touch base with you when you do have that. Sir, thank you very much for joining in and speaking with us. So that's Kirloskar Ferrous. The stock is down around 1.4% today, but it's done well this year. It's gained over 25% on a year-to-date basis. At this point, the company seems to be quite positive going into FY24, especially when it comes to demand and volumes. Time for a short break, but we will put the focus on Avenue Supermarts, which is down more than 30% in the last 22 months. Stay tuned.